Welcome back. And the markets haven't changed much since that quite interesting conversation that we just had on software as a service. The Nifty 50 currently trading above the 16,300 mark, comfortably so, and the broader markets also keeping pace. But let's focus in on Bajaj Electricals on the back of its earnings. The company clearly bearing the brunt of the second wave of the COVID-19 pandemic in the quarter that just went by. You had revenue that slid as much as 31% on a year-on-year basis, and you have a loss that was reported in the quarter of close to 25 crore. We're joined by the company's management, Anuj Poddar, the Executive Director of Bajaj Electricals, joining in. Thank you so much, Mr. Poddar, for taking the time. I do want to ask you about the impact that you saw for the company's business in with the second wave of the pandemic. With that ebbing now, though, are things getting back to normal slowly?
So, this quarter has been a tough quarter because of the second wave and the lockdown, etc. But, as it's opened up, we've seen demand starting to come back. June did see an uptick in demand. And July, if I talk about post-quarter, has seen a strong uptick in demand. So that makes us optimistic about the trend that may continue in the coming months. The pressure really is on the cost of commodity side, but I think that's a shorter term pressure that will wane out at some point. I think demand is a good sign, and we're positive about that.
Now, given the kind of increase that you've seen in raw material costs, margins clearly under pressure during the quarter, but are you of the opinion that margins have bottomed out, and are they likely to start recovering from this point, and what level do you see them settling at?
Yes, absolutely. So I think, the pressure on the commodity or raw material prices has been unabating since October 2020, but it is finally seeing signs of flattening out or becoming stable in the last 1 or 2 months. We see from here on, it may see a further cooling off in a few months down the line. So I think we've seen the worst behind us. We've been increasing prices, but there's been a lag in price increase given the pace of increase in raw material prices. We have done a further price increase in July, and we have one more round planned in August. But I think from here on, that lag effect will go in terms of, since the cost side is stabilized and the price increase as that kicks in, I think by September onwards, actually we'll be pretty much have caught on. So from Q3, I think we'll be back to full margins. I'm fairly positive of that. In terms of quantum of margins, as a company, we've been on a turnaround since the last couple of years. So we've been guiding investors a 1 percentage point margin expansion. And this year's guidance for us was anywhere between 9 to 10% on the normal quarters. We stay confident of delivering on that guidance.
Sure. Anuj, you mentioned about the price hikes in the month of July as well as August. But to what extent can you take price hikes without hurting demand?
So I think we've been tried to be fairly balanced and, calibrated in our approach on price increase. We took about a 3 to 4% price increase in Q1. And again, in July and August, we're targeting between a 3 to 4.5% increase across different product categories. Just to clarify, the July and August is for different categories. The same category will not undergo 2 price revisions. I think a 3 to 4% price increase in a quarter in the current environment is something that the consumer should be able to take in their stride without impacting demand too much. And if anything, we've taken the impact of that as a business to cushion that a little bit for consumers and do that in a more phased manner to make it convenient for them.
Sure. The festive season is just around the corner. What is your sense on whether or not we can see a huge uptick in demand come by this festive season?
So, we are optimistic about the festive season. Like I said, July has seen a good uptick in demand. August is early days, but we'll see how that goes. So we are fairly optimistic or buoyant about the festive season. And therefore, the biggest preparation that we can do is really stocking up well. So unlike last year where we had supply side pressures in terms of production capacities, etc., this year we are making sure we are well stocked up in advance to cater to any demand that comes our way. Onam, which is the first festival that kicks off in Kerala particularly, has not kicked off that well or may not kick off that well because of the rising COVID in Kerala. But I think that's a one-off thing. I think post that, we will see a good uptick in the festivals as they come one by one. So we are very positive about this.
Let's talk about inventory levels then. What's the kind of inventories lying with you and dealers?
So I think now we're pretty much back to normal. In our case, we follow a TOC model where our dealers or channels do not stock excess inventory. So they are pretty normal. And, we supplement or replenish that as they stock out. We are the ones who maintain the extra inventory, but that's a learning from COVID also, that to have just-in-time or bare bones inventory sometimes backfires. So we have stocked up little extra and are stocking up for the coming festive season, but yet, keeping a close watch on our working capital. So that is well balanced out. In terms of therefore being able to cater to them, we feel fairly confident. In terms of production in factories, we did take a break in production in factories in May and June. Starting about mid-July, factories are getting back to pretty much full capacity production. And I think from here on, that will be normal. So factories will operate normally at good capacity, August onwards fully, and our inventory levels are sufficient. And I think it is all getting back to track on a normalized basis.
Let's talk about your EPC business, which has seen some improvement. My question is, how sustainable is this improvement, this growth that you have seen? What's the outlook?
Absolutely. So EPC business, like we've shared before, is something that we've been fixing and, cutting back on the losses. If you look at this quarter's numbers also, last year in Q1, we had about a 43 crore loss. This year in Q1, the loss is down to about 13 crores. Our guidance is that, we will exit this year with having shown a, break even in Q4 in the EPC business, even if it may not be on a full year basis, so that we move into the next year on a clean slate. Importantly for us, one big milestone that we achieved now is within the EPC business, there are three different segments. All of them were loss making, but our illumination segment within the EPC business actually is, almost break even this quarter, and on a full year basis, we will deliver a bit from that. So incrementally, the total losses are coming down, and the constituents within the EPC also are correcting themselves, both in terms of, our business mix and the bottom line on that. So we're very much on track on a strategic direction of everything that we're doing.
Mr. Poddar, seemingly a considerable shift is taking place between the organized to the for the unorganized to the organized. Sorry about that. Players in the space. What market share has Bajaj Electricals managed to gain in the first quarter?
So yes, I believe that shift from unorganized to organized players continues. And I think as being amongst the leading players, we are all beneficiaries of that. It's a function of how we're able to both deal with the challenges as well as consumer preferences that comes towards us. So I think between if you look at our growth rate also this Q1, while it's not right to compare, but at about 56% growth that we've had in the consumer business on an aggregate industry basis, I think that's ahead of average industry growth. The top 3-4 players, of course, between us, there's a race that we all, in some quarters, somebody's ahead or not. But collectively, I think the top 4 to 5 players are gaining share over the unorganized and smaller players. And we are confident that that trend will actually continue to be observed here.
All right. Thanks so much, Mr. Poddar, for taking the time. Wish you all the best for the rest of this financial year.